Hey, what's going on, guys? In today's video I'll be giving you guys the third lesson of this course, and it's going to be about Fibonacci retracements. Now, before we head into the video, I want you guys to first know what are Fibonacci retracements. So basically, they are levels where stocks tend to bounce or reject, right? Which is why we're covering the first course of support and resistance. And then later on we'll get into chart patterns, candlesticks, and so on. So with that being said, let's head into some examples. Okay, before I show you guys examples, I want to show you guys what the meaningful levels are, right? So on our left hand side right here, I'm going to click here, and I'm going to click on the first one, which is Fib retracements, okay? And I'm just going to go right here just to show you guys the levels. And I highlighted the important levels, the 0.618 and the 0.5. But let me start from 0. 0 is basically just the top, right? Because from right here, if we go from the bottom to the top, then we're looking for support. If we go from the top to bottom, then we're looking for resistances, right? See how it's the opposite? 0 is down here, but 0 is up here, right? So if you go from swing low to swing high, you're looking for support, and if you go from swing high to swing low, then you're looking for resistance, right? Anyways, so the most important levels you should be looking at is the 0.5 Fibonacci retracement level and the 0.618 Fibonacci retracement level. Now the 0.618 is considered the golden pocket. Why? Well, this is because stocks usually tend to retrace back to the 0.618 Fibonacci retracement level. It is the most strongest retracement level out of all of these, right? And the 0.5 also tends to do well as well. Now, the 0.382 and the 0.236 are your short-term bounces, right? You could get those bounces, but they're not as strong as the 0.5 or the 0.618. Now, when I swing trade, I like to swing trade on the 4-hour when using the Fibonacci retracement levels. I've seen most success on the 4-hour while using the Fibonacci retracement levels. Now, of course, you could use a daily, right? The higher the time frame, the more meaningful these levels are going to mean, right? But for now, we're going to stick on the 4-hour. So how should you use these levels? The only way you should use these levels is the same thing as a point of resistance, right? You want to see multiple touches or a bullish candlestick, right? Because we're talking about support in one of these levels, right? So let me go ahead and show you guys an example. Okay, here's our first example. So what you want to do for looking for support, you want to start from swing low. You could pick any low and then go to swing high, right? The high. So the whole point of using the Fibonacci retracement level is to see where you could find an entry, right? Let's say you missed this whole move to the upside and you want to see where you could get into support. Now, remember what I said. The levels you want to be looking at is both of these, right? The 0.5 and the 0.618, right? So we came up and all the way right here, and then right here we dropped, right? At 394.01, right? We dropped. So now we want to see where we could get in, right? So we draw from swing low to swing high, right? And then we wait for the retracement either to the 0.5 or the 0.618, okay? Now, if you see, we did retrace back to the 0.382 right here, and we got a pretty nice candlestick, right? That's a hammer. And we did bounce, right? But it wasn't as strong as the 0.618 bounce, right? This is a very good example. Now, look at when SPY came back down and touched the 0.618. Now, as soon as we touched it, we got this beautiful high close doji, right? Very, very high, also known as a dragonfly doji. Very bullish candlestick, right? And then as soon as we touched it, ever since that touch, we've just been uptrending, right? This is what I mean by you really want to get into these trades only at the 0.618 or the 0.5 level. Not to say that the 0.382 wouldn't work, but if we see here, yes, we did bounce, but it wasn't as strong as the 0.618 Fibonacci retracement level bounce, right? As soon as we touched it, right, literally clear as day, we bounce, right? So that's exactly what I mean by the 0.618 is the level, or known as the golden pocket, right? That's the level you want to get in. Now we're going to move on to a bearish example, right? So here we're on Facebook and we're going to do the exact opposite, but it's the same concept, right? Instead of starting from swing low to swing high, we're going to start from swing high to swing low, right? And remember the levels I told you guys to pay attention to, the 0.5 and the 0.618, right? I even highlighted those levels. Now, let's say you missed this whole move to the downside, right? And you want to say, well, I know that Facebook's in a downtrend, right? We're making lower lows and lower highs, which is bearish, but I want to know where I could get in. Now, like I said, you want to look for bearish candlesticks. Now, what you want to look for is a bearish candlestick on a resistance level, right? It could be horizontal or on a trend line or on a Fibonacci retracement now that we're talking about it, right? Whenever you see a bearish candlestick on a resistance level, it's very powerful, right? Now, we see a prime example of a inverted hammer right here, right? We have an inverted hammer on the 0.5 level, right? We touched it clear as day. And as soon as we touched it, we started to push lower, right? That's a prime example of a bearish candlestick on the 0.5 level, right? Like I said, a bearish candlestick on a resistance is very, very powerful, okay? Now, I know I didn't mention the 0.786. Now, it's there, right? It's on the Fibonacci retracement. I don't use it because whenever you see a stock retrace to the 0.786, it's considered a deep retracement, right? So if you see it do this, right, and you see a retrace back here, we could see a bounce, but it's not going to mean as much as the 0.618, right? You could definitely see a bounce at the 0.786, but it's not as powerful, right? Like I said, you want to be looking at these two levels right here, the 0.5 and the 0.618. Now I'm going to show you guys an example of what I mean by that. So over here on Apple, we can start from swing low to swing high, right? And look where we bounced from. We have multiple touches at the 0.786 level, right? If you look here, we have multiple touches, and that's exactly where we bounced from, right? If you see multiple touches at one of these levels, then it's a very good choice to get in, right? It's not a bad choice, but it's not a very risky trade, but it could be risky just because it's considered a very deep retracement. So ideally you want to get into the 0.618, but this is just an example to show you guys that it could work. Okay guys, here's another example of a support bounce from a Fibonacci retracement, right? So I'm going to start from swing low to swing high. Okay, swing low to swing high. And of course, we want to look for the golden pocket, right? The 0.618. I zoomed in here, right? Now, from swing low to swing high, we see this very nice hammer, right? At the golden pocket. After we touched this, we bounced, right? Like I said, whenever you see a bullish candlestick on a support level, especially on the golden pocket, very powerful. You guys can take the trade, right? And vice versa, if you see a bearish candlestick on a resistance level, then it's very bearish, right? And it's powerful, right? So follow, right? So we saw that we had a bullish hammer stick right here on the 0.618 level, so we could take the trade, right? And we bounced perfectly, and look, as soon as we touched it, we bounced and we kept heading higher, right? So that's an example of a very powerful trade right here, right? Because we bounced at the golden pocket with the bullish candlestick. Now, let's say you wanted to get in a trade, right? Let's say you wanted to get in Tesla because you missed this big move. You can start from swing low to swing high, and look, we bounced exactly at the 0.618 level, right? Now, this is considered a inside a candle because this previous candle is inside of this candle right here, which is a pretty powerful candlestick pattern, right? So you have an inside a candle at a 0.618 golden pocket Fibonacci retracement level, so you could take the trade, right? So that's an example of how you could have gotten Tesla. So I hope this cleared up a lot of things. I hope you guys practice more and more about Fibonacci retracements. Of course, this is just a basic example on Fibonacci retracement, but I hope I helped. Next video will be about moving averages, a very important topic as well, as they are very effective. All of this, what I'm teaching you, is going to build up on top of each other. So the last video will be about an hour long, using all of what I taught you guys into how to get into trades. All right, so yeah, I'm out.